Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. I took a long break of 3 months because of my personal health issues, but with the grace of Almighty, blessings of parent, and support of all family members and well-wishers like you all, I have recovered and here I am back, welcoming you all to discuss outlook on rupee. To see the chart, in the chart we have divided the rupee momentum into two parts, move A and move B. In the move A, it is clearly visible that 88.80 was a strong resistance which RBI protected last time. And if you see the move B, it has been observed that from 87.80 to 88.76, the momentum was very fast. Now the question is, in coming days, whether RBI is going to defend 88.80 or not. If not, then where the rupee is heading. In today's presentation, we are going to discuss that. To answer where the rupee is heading, let us understand what are the factors which will be impacting positively for rupee. The first factor is debt inflow. In the month of October, we have seen debt inflow close to $2.3 billion, and we are expecting that the flows in the debt market will continue as the interest rate differential is a positive factor for rupee, as Fed is expected and had already cut interest rate, but RBI is expected to hold. This positive interest rate differential will bring flows in the debt market. In the month of October, we have seen that equity market also received inflows close to $1.3 billion, and we are expecting the flows might continue as 41,000 crore IPO is lined up in next 30 to 45 days. The second important parameter which suggests that rupee is currently trading undervalued is REER, which is real effective exchange rate. Real effective exchange rate is quoted at 97.65 currently, which is at 7-year low. Historically, it has been observed that whenever the rare is trading below 100 levels, then sharp depreciation generally do not occur. Historically, it has been observed that whenever the rare is trading below 100 levels, then sharp depreciation generally do not occur. The third important or positive factor which can lead to appreciation in the rupee is a trade deal with US. Market is expecting that as US have removed sanction on Iran's Chabahar port operation by 6 months, this is indicating that there can be a positive strategic talk between India and US as far as trade deal is concerned. Now let us understand what are the negative factors which can affect rupee. We are expecting dollar index, which is currently trading near 99.5 kind of a level, can move towards 100.50 or 101 kind of a level. Now someone will have a question that Fed had cut interest rate in its last meeting, but they have sounded hawkish, which can take dollar index higher towards 100.50 to 101 kind of a level. If dollar index move higher, generally it creates pressure on all emerging market currencies and it can keep a pressure on rupee also. Second negative factor can be rising trade deficit. In the month of October, we have seen the trade deficit data came out for the month of September 2025, which was at 13-month high. The trade deficit widened because of higher gold import and US tariff impact. Till that time, tariff settlement with US is not taking place, we are expecting that trade deficit can widen and that can put a pressure on rupee. Now let us discuss outlook on rupee. In the short term, until the US-India trade deal is not signed, we might see some pressure on the rupee and the rupee might range or trade between 88.50 on the lower side to 89.10 on the higher side. However, once the deal is signed and the rupee breaks a critical support level of 88.40, we may eventually see it to move towards 87.70 to 87.50 kind of levels. With this, I will end my today's presentation. Jai Hind. Namaskar. फिर मिलेंगे next week. Thank you.